Good afternoon. This is the Elliott Wave weekly update for the NASDAQ 100, being recorded on Friday, August the 8th at 4:20 p.m. Pacific Daylight Time. I'm going to begin with the NDX. I'm on my monthly, maximum monthly chart, and this data goes back to 1985. I believe this particular index, the future came on in 1985, but I think the index actually started in 1982. So pretty much we have all the data. So where we are is that I feel like the first rise up was primary wave one, and that the NASDAQ's version of the great collapse, the crash, was in the year 2000, 2002, and I'm labeling that as primary wave two. So from that point, which is actually started in October of 2002, we began the primary third wave up. And within that, there's going to be five waves of intermediate degree, of which you have one, two, three, and four complete. So I bring it down out of that monthly, bring it down to the 5-year weekly. And there we see intermediate three, intermediate wave four. That was in October of 2022. So from October of 2022, we have been putting in an intermediate degree wave five. And wave five will consist of five waves of minor degree, of which we have one, two, three, and four complete. Minor four completed in April. To be exact, it was April the 7th of 2025. And then from that point, from that low, which was 16,542, we began the minor fifth wave up, which will complete minor five, intermediate wave five, and primary wave three. So we are getting close to what I term is pretty much a mid to a little bit longer term top. And we'd be looking for a primary fourth wave correction. Now, what would that fourth wave correction, wherever this ends up, whether it's 24,000, whether it's 25,000, whether it's 26,000, makes no difference. Once we're underway within that primary fourth wave, we would be looking for the market to come back, right? Because Elliott has left for us, and it's a guideline that the fourth wave in motion will find its terminus, its endpoint, within the fourth wave of one lesser degree. If we're counting a primary fourth wave, one lesser degree is the intermediate, and here's the intermediate fourth wave right here. So we'd be looking for the market to eventually find its terminus towards the end point of this fourth wave. So the box would actually be from there to there. And so the low is as 10,440 would be the low in the cash market. And that's kind of where we're looking. So basically, what we're basically correcting is the entire fifth wave or the entire rally from October of 2022. So inside, we're in that minor fifth wave. Now I'm going to drop down to the daily, and we can take a look. We're in the minor fifth wave up. It will also consist of five waves of minute degree, of which we have one, two, and three complete. And my count right now is that we are within the minute wave four, which is, of course, down, and it should find its endpoint within the price territory of the fourth wave of one lesser degree, which, of course, is the minuette. So we have minuette, then we have minute, and then after minute, we have minor. So minute retraces back to the minuette degree fourth wave, and that's all the way down here at 21,533. I shouldn't say all the way, but that's where that low is, and we're looking for it to get into this box in here. So far, we've only reached a low at 22,673, and that's after reaching a high at 23,589. So now today, I believe I'm going to go down. So that's the daily. And now we're going to take it down to the hourly, and we're going to take a look inside this minute fourth wave. So here's minute wave three. That high was 23,589. And today we actually, in the cash market, made a new all-time high. And that was at 23,619. And based on that, I've kind of revamped the labeling, not the count, but the labeling of what is taking place in here. And so what I've done is, and I mentioned this in both the intraday update and the morning update, that I'm likely was going to change this initial decline to an ABC decline. And now I'm going to show it to you here. There's the A, there's the B, and then we have 1, 2, 3, 4, 5 for the wave C, and that put in the minuet wave A of the minute fourth wave. That puts us in line to get a B wave. Now, originally I had put the minuet B wave there, was calling this an X wave, but actually I thought maybe we were starting the C wave. Well, the market let me know, no, we're not. And so we bottomed. And instead of calling it wave one down, and this would be wave two, that's not going to happen because we've gone above the starting point of wave one. So pulled it out again, and I dropped this ABC, which I do feel is still an ABC, but I dropped it a degree, and I moved the subminuet A up to the high reached on the 7th. So yesterday, with that high coming in at 23,553, that completed wave A. Then we had that quick sell-off yesterday, and that took us down to 23,225. I'm going to label that as a B wave of the subminuet B wave of the minuet B. Now, we're already over that high. That is another reason why I've gone down. And now I'm looking for the irregular B. And I've been talking about it, and I've been trying to lay it out as potential just because of the strength that we've had within the NASDAQ. And basically, it really falls to just a few stocks. And the major stock that's pushing this market higher is Apple. And Apple came out with some good news and some pleasing news, I guess, to the White House. And so, and that is that they're going to invest, I think that number is 200 billion or at least 200 million, somewhere on there, but it's 200 something dollars in building some plants. They're intending to hire 20,000 new employees, and they're going to attempt to produce all the glass and the casings for the iPhone and the rest of their products here in the United States. So that actually sits very well with the current administration, and it also bolstered and just really grounded and put a rally into place for Apple. Now, whether we want to think that that's a little bit too early, too soon, because it's unproven, they aren't going to be doing that just yet. And how long it takes to build these plants, how long it takes to get 20,000 people hired and in place and producing revenue. So we don't know, but the market has rallied. I'm going to say $30, at least $30 off of that news. And today the market was trading above 230. And I believe before this is all done, and it's just going to be a function of the rally. And still basing it on that good news from Apple. But in any case, I just think that Apple will continue to support the rally. Now, here's kind of my thoughts, because I also have, and I'm running algorithms that are dictating or just showing me the potential for what could happen between now and the end of the year. And so they continue to signal that we're largely to see, we have a large potential to see a large spike, a large rally, a large surge in the fourth quarter. And it could actually go over into the first quarter of 2026. So that's out there. That's still out there. But here we are finishing up, reaching, excuse me, the top of primary wave 3. So we come down in a we come down in a minute fourth wave. We go back up in a minute fifth wave, and I'm expecting it, of course, to break into its own five and to extend, much like the minute third wave did. And we can just compare that for very briefly. The minute third wave started on April the 21st of this year, and it completed on July the 31st. So May, June, July, it was 3 months. So even if we get wave five to equal wave three, we're looking at 3 months from whenever we can get that fourth wave done. Maybe this fourth wave will come in maybe by the end of August. So we have September, October, November. So we're pushing it right out there to where, sure, now we fitting into that time frame that the algorithms, after scraping everything out of the internet, and this is what they're coming up with, a lot of people's analysis, and that's what we're looking at. And so I still believe that this is all possible. And the time-wise, that the completion point for primary wave three here in the NASDAQ, cycle wave three in the Dow and in the S&P. So we may be starting 2026 with and I've seen this before, by the way, where we peak and we actually peak 1 or 2 days into the new year, and then we just start to do a major correction. And I'm thinking that's exactly what we can do. In fact, I can take you back. We can take a look here in the NASDAQ to 2021, which is right there. So this is December of 2021. And here we are in January of 2022. We sat up at the highs. We didn't make a new high, but we were up at the highs. And then, of course, we just started to decline all the way into October. So that was 2022. So again, can we do that one more time? Yeah, we could. We definitely could. Now let's go down to the hourly chart. Now, again, we're taking a look inside here. So here we are. A, B, we're into the C wave. I believe we can't tell because the cash market closes and the futures continue to trade and then trades all night. But I think that we have a 1, a 2, and we're working on or have completed the third wave. So I'm thinking here we may have a little bit more, do a third, and then come off in a 4, or it may just start on Sunday and into Monday in that fourth wave, a smaller fourth wave. So it's going to be wave 4 of C, and then we come back up in a fifth wave. Now, what are our markers for that? Well, once I do get a small 4, then I can add wave 1 to 4, and then we'll tighten this up a little bit more. But as it is right now, I have the marker for wave C. And wave C would be 0.618 of wave A at 23,774. Well, 1.236 would be, or let me just say, the 23,807 level would be the irregular for the B wave, 1.236. So there is a little cluster right in there. Now, should the C wave continue to go above this, our next marker comes in at the 786 level, which is 23,926 or 925. And then we have the 1.382 for the irregular here at 23,941. Now I have one more, and that is where wave C would be equal to wave A, and that's 24,116. Can I say that it won't go there? No, I definitely cannot. This rally could just carry this thing, and then we just kind of come apart at the seams, so to speak. Because again, we've seen hints of what the market can do when it's shocked, when something is like not making any sense, when something is, particularly now, there is a lot of tariffs that are going into effect, but there's still a lot that haven't been finished negotiating. And so we still have threats coming from that area, although we're trading around them as if everything's going to be okay, but they still remain. Plus, we have geopolitical plus. So again, sticking to the technical, I understand that usually we only work on an irregular, we only work with 1.236 and 1.382. So I'm kind of thinking that we end up here at the second one. And that is because of the C wave. So I'm thinking if we got a little bit more to go in wave 3 and we get up to 23,007, we're here in the cash 23,700. Well, then we're up at this level and we're up at the 236 level. So I'm thinking, somewhere in there for the completion of wave 3, we come down into 4, we go back up into 5, and we end up here at the upper end of the 23,000. So 23,900 plus. That's where I'm thinking that the C wave and then the minuette wave B are going to end here. And then we come back down in a C wave. We'll have redesigned, or not redesigned, but we will implement additional markers to come down because, of course, if we get up to these levels, then the C wave would be expected to go 1.618 times the length of wave A. So, and we'll put that all in place. Actually, it would be this A. And we'll put that in place so that we can see where it all kind of comes back down to. Okay, so that's the cash. Now, moving averages. This is the hourly. Everything in alignment to go up. So everything kind of flipped back around and is all looking pretty good. Let me take this out to the daily. Come on. And the daily, again, very, very clean. There's the 8, there's the 30, there's the 78, there's the 200. No, by the way, I've been running the 30, running what used to be the 20 as the 30 and the 50 as the 78. I may go back to the 20 and the 50. I'm not really seeing much of a difference between them, that how they function. But I've been told, and I watch, and it does kind of fit in a little bit, that the 30 and the 78 are what's being plugged into algorithms, but not enough, I think. So I may take these back to the 20 and the 50. Right now, they're left alone, but we can see that everything is in alignment to continue to go up to finish this wave. All right, let's go over and take a look at the futures market, which you can see continues to fill in its blanks all the way. So here we are, minor wave 4, 1, 2, the finish of 3, bringing it down very quickly to the hourly because that's where we need to look. There's the minute wave 3. So we're really just looking at the development and the trading for this minute fourth wave, of which we have minuette wave A complete. Now here again, A, B, 1, 2, 3, 4, 5, C, it's an A wave. That allows for this, what's exactly what we're getting, whether it finishes up here before crossing over and making a new high or doesn't. The cash has. So the cash, every uptick that it does from now is going to be producing new all-time highs. This actually right here is the all-time high for the NASDAQ. I believe it is. And let me double check that. Yep, it sure is. So back down to the hourly. So they're at 23,845 is the all-time high. And once we get above that, as I've been talking about, we have to start to consider these. And these are the markers for, first of all, the irregular B wave. And then these are the markers for the C wave. These others that are sitting in here are actually the markers. I should put them in a different color. Yes, sorry. Let me just change those quickly because those are for the sub. And that's going to stop that little bit of confusion. So here we have these. These are for wave 3. So let's put this picture together. We did reach today. Today's high was 23,767. This 100% where wave 3 would be equal to wave 1 was at 23, or stands at 23,776. I've not marked this as wave 3. I believe we still have a little bit more to go. And I think we can get above it and just a little bit more, which does secure that wave 3 will be the longest wave. So keeping all that in mind, I think we get above here probably on Sunday into Monday, or even into Monday's our regular session, which gives a chance for the cash market to catch up. But then we have another top side up here at 23,939. That's just for wave three of the C wave. So we come back down in a four, we go back up in a five, and that's where these come in here. And so 1.236 is 24,122 in the future. The 0.882 marker for the C wave comes in at 24,116. So we say 15 to 20, and this is 20 to 25. So they're very close here. And if they exceed that and they come up to the next level, it's not that much further, where we have 100% at 24,229 and 1.382 at 24,269. So we have two, which I feel should be solid to finish the B wave and finish this C wave, and then in turn the B wave. So here's going to be the internals for here. This is the existing high. These are the internals for this third wave. And then we come back down and we go back up, and this is the area that I'm looking at to complete wave B. And then that sets us up for a pretty solid decline, looking much like this. Again, at this point, you would come in and say, I don't see how that's going to happen because we've got all this bullishness in the NASDAQ stocks. And I'll be like, yeah, it's right. They do. But I think much of what we saw today expired today. I know some of it's been rolled out to the August expiration. So this rally may take us through next week, but next Friday is the August monthly expiration. And that could just really take care of a lot of gamma, take care of a lot of these options that have been pumping up the market, and because they expire. So we may see that begin, or if enough of it's been rolled out, it'll get carried through to next week. We could see the rally actually go through next week and carry us higher. But we might start to see breaks here and there, where Apple's going on one way and Nvidia, which they're coming up on their earnings. Now, if they follow pattern that every single major company, basically in the Mag 7, they've come in with great earnings, or they exceed expectations or estimates, and they go up and then they start to sell off, and then they just sell off. Now we've seen that in Microsoft, although it has come all the way back, but we saw it reach up a higher level, sell off, and then come back. Meta went up, sold off, but it has come back. Tesla is just Tesla at the moment. So I think it's just kind of flowing according to where the options are sitting. So again, I think we have AMD, their earnings have come out. We saw them run back up to that point that they got to post earnings and slide back off into today's close. So Apple, I think 230 was a big options number. So we had 220, 222 and a half, 225, and then 230. How much of that's got rolled out, or how much then get additional? I cannot discount, nor can I say it can't happen, that Apple actually goes to a new all-time high now, and that would be above 260. So we've gained 30 points since they made that announcement. I believe it was on Tuesday, maybe Wednesday. So in 2 days, this thing is just powerhouse. And so what's to say that next week it tacks on another $30 and then slides after that as we get into this downside move. So that's kind of what could be behind a lot of this. But what's actually going to produce it is, I think, nothing more than, or to start it, I think nothing more than an expiration. So that's next Friday. And also, just it'll be overbought. It'll be extremely overbought. I think if they continue to push at the level they are, or at the degree that they are, I think it'll be extremely overbought, and it'll just kind of fall on its own weight. Won't take much additional news to kind of just pull the plug. And we've seen it. We saw it here. We saw it here. We saw it here. So again, we can see it again. And this time it might be severe enough that it brings us down. And again, these will be revised. Right now they stand. They still stand because it is a minute wave 3, and that's the way the fibs fall. But we'll be putting in some different levels as well. Now, moving averages on the hourly, they are looking pretty good. And now I'm going to take a look at the daily, and then we're going to get this published. And the daily, all very good. In fact, that 30 is right up there, cruising very close to the 8, which also kind of, until they start breaking it, also kind of just leaves us in this upward momentum. And the 50 is now picking up some steam, and the 200, well, actually the 78, and the 200 is also. So things are continuing to look pretty good for a continuation, at least into the beginning of next week, if not the entire week. All right, that's it. Our next update will be on the morning update on Monday.